Imagine a small strip of rocky land on the eastern edge of the Mediterranean. On 14 May 1948, with British troops boarding the last ships out of Haifa, David Ben-Gurion declared that this place, barely 650,000 Jews, a handful of Arab towns, and almost no foreign currency reserves, was now the independent state of Israel. 24 hours later, 5 Arab armies invaded. Farmers welded steel plates onto trucks. Pilots flew check-made fighters whose guns jammed if they climbed too fast. Yet the new state survived, signed patchwork armistices in 1949, and set a pattern it has followed ever since. Each existential danger is treated as an engineering problem to be solved. The 1950s were austere. Food, shoes, and cooking oil were rationed under a system called the Tsena. The Histadrut Labor Federation, part union, part employer, ran bus companies, textile mills, and even the National Health Service. Imports were licensed, dollars were hoarded like gold, but immigrants kept coming. Holocaust survivors from Europe, Jews expelled from North Africa and the Middle East. By 1960, the population had tripled to 2 million. Those penniless newcomers drained swamps in the Hula Valley, picked oranges for export, and gave Israel its first true economic advantage: plentiful, motivated labor. Growth averaged almost 10% a year, off a tiny base, but impressive for a state under Arab boycott. In the spring of 1967, the Middle East was a tinderbox. Egypt's President Gamal Abdel Nasser, buoyed by Soviet backing and pan-Arab sentiment, ordered UN peacekeepers out of the Sinai Peninsula, massed 100,000 Egyptian troops on Israel's southern frontier, and closed the Straits of Tiran, Israel's only direct shipping lane to Asia and East Africa. Syria, already shelling Israeli farms from the Golan Heights, signed a mutual defense pact with Egypt. Jordan's King Hussein, fearing isolation, followed suit. Radio Cairo spoke openly of annihilation. With trade routes choked and 3 armies on its borders, Israel felt it could not wait to be attacked. Day 1, 5 June 1967. At dawn, the Israeli Air Force launched Operation Focus, a preemptive strike that destroyed roughly 300 Egyptian aircraft on the ground in 3 hours and crippled Syria's and Jordan's air fleets the same day. Air superiority let the Israeli army advance almost unopposed from the air. Days 2 to 4. In the south, armored brigades punched through Sinai sand to the Suez Canal. In the east, paratroopers fought street by street to take East Jerusalem and the Old City, including the Western Wall. In the north, infantry clawed up the fortified escarpments of the Golan Heights. Day 6, 10 June. A UN-brokered ceasefire froze new front lines. Sinai Peninsula and Gaza Strip seized from Egypt, West Bank and East Jerusalem captured from Jordan, Golan Heights taken from Syria. Israel's landmass nearly tripled overnight, creating far deeper buffers around its heartland, but also saddling the state with responsibility for more than 1 million new Arab inhabitants and miles of exposed borders. The victory shocked the Arab world and upended superpower diplomacy. Yet for Israel, it created a new kind of burden. Holding the Sinai, West Bank, and Golan demanded a huge standing force and frequent reserve duty, pulling skilled workers out of factories and labs for weeks each year. Defense spending jumped above 20% of GDP in the late 1960s, siphoning money away from housing and export-oriented industries and setting the stage for the debt and inflation spiral of the 1970s. Realizing it could not rely on European arms forever, Israel accelerated domestic weapons design, an industrial push that decades later would yield the Merkava tank, the Arrow missile, and many civilian tech spin-offs. The country's land area had tripled overnight, leaving a long, exposed perimeter to guard, and at a stroke, turning a citizen army of shopkeepers, engineers, and students into permanent custodians of vast new territories. Reservists who once drilled a few days each year were now pulled away from factories and classrooms for weeks or months at a time, forcing employers to juggle missing staff and driving labor costs higher. Defense spending, already hefty, surged toward 1/5 of GDP. Every additional tank or outpost meant one less housing block or export machine tool. That strain only grew after the Yom Kippur War of October 1973. On Israel's holiest day, Egyptian forces stormed across the Suez Canal, and Syrian divisions poured through the Golan fog before sunrise. Israel clawed back the initiative, but casualties were heavy, ammunition stocks nearly empty, and the treasury staggering under the urgency of rearmament. Worse, the Arab oil embargo that followed quadrupled world crude prices. Israel, with no domestic wells, paid whatever the spot market demanded. Its fuel import bill alone soon topped 5% of national income. To cushion households, the government indexed wages, pensions, and even bank deposits to the cost of living index, and financed the growing gap with rapid money printing. Inflation that had hovered in the teens now struck 111% in 1979, 133% in 1980, and a staggering 374% in 1984. Grocery clerks carried tagging guns like sidearms, re-ticketing tins of hummus each morning. Rent contracts were rewritten in US dollars, which families hid in coffee jars or stitched into mattress seams. The shekel's collapse made long-term planning impossible. No builder would quote a 3-year apartment project, and no foreign supplier would grant a payment term longer than a few weeks. As prices spiraled, tax receipts lost real value between collection and deposit. Deficits ballooned, and the politically captive Bank of Israel could not raise interest rates fast enough to stem the flood of new money. Foreign exchange reserves evaporated, credit ratings slid, and by early 1985, Israeli newspapers openly debated the prospect of sovereign default. In July 1985, an unlikely national unity coalition pushed through a brutal economic stabilization plan. Subsidies were slashed and public wages frozen. A new Israeli shekel, worth 1,000 old shekels, replaced the disgraced currency. The Bank of Israel won legal independence to set interest rates. The shekel's value was allowed to fall to a realistic level, then pinned to a crawling peg against the dollar. Unions accepted partial de-indexation of wages. Real incomes fell sharply that year, but inflation collapsed below 20% by 1987. For the first time in a decade, Israelis could trust price tags to mean the same thing from week to week. That credibility later proved priceless. As the Soviet Union crumbled, nearly 1 million Russian-speaking Jews, scientists, engineers, doctors, landed at Ben Gurion Airport. Many drove taxis at first, but their skills instantly raised Israel's share of university-educated adults by a fifth. Seeing a once-in-a-lifetime chance, the finance ministry launched Yozma in 1993. For every dollar that a foreign venture capital fund invested in an Israeli startup, the state kicked in 2 more as an interest-free loan. The fund could later buy out the state's share at cost, so investors still risk their own money, curbing corruption. Within 7 years, the country of 6 million citizens hosted 70 VC funds and generated firms like Checkpoint, cybersecurity, Mercury, enterprise software, and Waze, crowdsourced navigation. Key to that boom was the Israel Defense Forces Unit 8200, an elite signals intelligence corps. Soldiers who wrote code to intercept enemy radio chatter left the army fluent in encryption, data science, and real-time analytics, skills that turned quickly into civilian products. For decades, Israel imported every drop of fuel it used. That changed in 2009 when drillers hit the Tamar gas field, followed in 2010 by the even larger Leviathan Reserve. When Leviathan began pumping in 2019, it produced roughly 12 billion cubic meters a year, enough to cover domestic electricity needs and still leave gas for export to Egypt and Jordan. Royalties go to a sovereign-style wealth fund, reducing the danger of a resource curse, while cheap gas has allowed coal-fired stations in Hadera and Ashkelon to close. Today, Israel spends about 5.4% of GDP on civilian R&D, the highest share in the OECD. It also channels roughly 9% of GDP to defense, a burden that might cripple another country, but in Israel produces dual-use breakthroughs. Take Iron Dome, the Tamir interceptor rocket, designed to down Hamas rockets in seconds, employs small, cheap radar chips that later became standard in mobilized driver assistance cameras. The same labs that perfect drone swarm algorithms for the Air Force spin out startups in agricultural mapping and warehouse automation. International giants notice. Intel, which first arrived in the 1970s, announced a US $25 billion expansion of its Kiryat Gat fab in 2023, the largest single foreign investment in Israeli history. Microsoft, Google, and NVIDIA all run AI or cybersecurity campuses in Tel Aviv or Haifa. By 2022, high-tech accounted for 53% of merchandise exports and 1/5 of GDP. Tourism, 4 million visitors a year before COVID, adds only 2% of output, underscoring how brainpower, not beaches or oil, drives the economy. In January 2023, Prime Minister Benjamin Netanyahu's coalition rolled out a bill that would let the Knesset override Supreme Court rulings with a bare majority. Within days, lawyers in pinstripe suits were sharing sidewalks with fry cooks and data scientists. Every Saturday night, the crowds grew. First 50,000 in Tel Aviv, then 150,000, then packed arteries from Haifa to Beersheva. They sang Hatikva, but they also chanted Demokratia like a drum beat. Reserve pilots warned they would stay home. Cybersecurity chiefs told foreign clients their code repositories were moving to Frankfurt. Venture capital deal flow, once Israel's pride, fell almost 50% between Q4 2022 and Q2 2023. For 39 straight weeks, the protests never skipped a Saturday. The bill that finally cleared the Knesset in March 2024 was a watered-down version, but the episode imprinted a lesson on every balance sheet. In the startup nation, the rule of law is as valuable as any tax credit. Hamas commandos stormed across the Gaza border, killing 1,100 Israelis and dragging 251 hostages into tunnels. Israel's response, Operation Iron Swords, pulled 360,000 reservists from offices, orchards, and lecture halls, 13% of the workforce. Hezbollah opened a northern front within hours. The Home Front Command told beachgoers to shelter. Code sprints moved into bomb shelters. Zoom calls paused for sirens. Yet the truly global jolt came 6 months later. For the first time ever, Iran launched more than 170 drones, 30 cruise missiles, and 120 ballistic missiles directly at Israel. An improvised coalition, Israeli Arrow 3 and David Sling batteries, US destroyers in the Med, British Typhoons over Cyprus, French frigates off Crete, Jordanian F-16s over the desert, shot down almost every projectile. 5 nights later, Israeli jets struck radar sites near Isfahan, signaling reach without tipping the region into all-out war. The price tag was staggering. SIPRI reports defense outlays leapt 65% to $46.5 billion in 2024, the steepest rise since 1967, lifting the defense burden to 8.8% of GDP. Tourism collapsed almost 80% in weeks. El Al rerouted through Cyprus. Eilat's seaside hotels hosted evacuees instead of divers. Yet tech exports slipped only 4%. The Bank of Israel still predicts 3 to 4% growth in 2025 as reservists return and reconstruction contracts flow. But the human cost is harder to ledger. By mid-2025, more than 56,000 Palestinians had been killed in Gaza's maze of streets and shelters. Much of the strip lies in ruins. A one-week pause in November 2024 swapped 110 hostages for Palestinian prisoners, but talks collapsed 4 months later over the next batch. In May 2025, Washington floated a 60-day ceasefire plan. Israel would halt offensives and withdraw in phases. Hamas would release the remaining captives. 1,236 prisoners would go home. Aid convoys would surge. Barely 8 months after Iron Swords ignited Gaza and Lebanon, a second front erupted, this time 1,500 kilometers away. On 13 June 2025, Israel launched coordinated pre-dawn strikes against Iranian air defense radars, ballistic missile batteries, and 2 suspected uranium enrichment halls near Natanz and Fordo. Tehran answered that night with salvos of Sejil and Imad missiles, plus swarms of Shad 238 drones that skimmed the Red Sea before arrowing toward Eilat and Dimona. Over 12 days of tit-for-tat, the fighting killed at least 930 Iranians, among them 3 Artesh generals and several nuclear scientists, while 28 Israelis died when an Iranian missile struck an apartment tower in Beersheba. A hastily formed air umbrella coalition, U.S. Aegis cruisers in the Gulf, French Rafales out of Al-Dhafra, Jordanian F-16s over the Dead Sea helped intercept more than 85% of incoming Iranian munitions. On day 12, Qatar brokered a mutual stand-down. Israel halted air raids, Iran stopped missile launches, both sides kept cyber operations on a lower deniable flame. The truce left Iran's air defense grid badly gashed, several enrichment halls gutted, and Israel's budget planners staring at a defense bill that had already jumped 65% year on year. Yet within hours of the guns falling silent, Ben Gurion runways hummed again, and Tel Aviv startups pushed code to GitHub, proof, once more, that in this region combat and commerce often share the same calendar. 75 years after Ben Gurion called austerity the price of rebirth, Israelis still run twice as fast to stay in place. They have raced through embargoes, hyperinflation, dot-com bust, and war, yet emerged richer after each lap. Their story is neither linear nor tidy, but it is coherent. Every crisis forced an adaptation that later paid dividends, and every dividend funded the resilience to face the next shock.
That's all for today. Thanks for watching.
Like, comment, and subscribe.